Good afternoon, Facebook. This is Shannon. This is Charmaine.
Hi, everyone. Welcome to Taxes and Tea on Thursday.
Yes. Well, I wanted to start you guys by talking about how to start your new business.
So, we want to talk about why you want to start a small business and what are the benefits of starting that business.
Okay. As a small business owner, you may assume the IRS have bigger fish to fry than your small business operation. However, recent reports have cited that the IRS has increasingly targeted small businesses for tax audits.
So, in fact, the National Taxpayer Advocate estimates that small businesses spend approximately 2.5 billion hours each year trying to prepare their tax returns. Get that through your head. 2.5 billion hours trying to prepare those tax returns. So when you think about that, that's the equivalent of 1.25 million full-time jobs. Woo! That is mind-boggling. The study also found that 70% of small businesses employ tax professionals for tax preparation to represent their interests because you can't be expected to know it all. You do what you do well for your small business, but that's not necessarily getting the taxes done. So that's what we're here for at Tax Net.
Okay, to avoid wasting time, money, and resources, please pay attention to your potential tax burden when forming your business. The formation stage is vital to maximizing deduction and minimizing your tax liability for the future.
So, with the new Tax Cut and Jobs Act being in full effect, many small businesses don't really know how that's going to affect them and how that's going to impact their tax bill. So, a lot of business owners don't even know what the corporate income tax rates are, what the business tax deductions may be, or even what tax cuts they may be eligible for.
So, as your tax advisor, every small business owner should understand the five very important things that it can affect the business income taxes and overall change your tax situation.
So, you have to determine whether or not you should choose a sole proprietorship.
If you're operating an unincorporated business and you are the only owner, then you're automatically a sole proprietor. This is the most common business entity, over 23 million sole props in the United States. It's the easiest to set up and manage, but also one of the riskiest since you personally assume all financial and legal obligations.
But the great thing is that the taxes are straightforward since you can report business income and losses on your personal tax return, and that will be on your Form 1040 using your Schedule C. So your company profits will be added to your other income, interest, dividends, etc. on your personal tax returns.
Okay, and with the new laws, you know who we have in president, sole props are able to take advantage of the 20% tax deduction, which allows them to deduct 20% of the business net income, that's the overall income, from their taxable income, which reduces your overall tax liabilities.
Right. So what's an X corporation?
As corporations may pass income directly to the shareholders to avoid being double taxed. Double taxation means that a firm profit is based on the business tax return, and after profits is distributed to owners, it's taxed again as personal income. But this won't happen if your company is set up as an S corp. So be careful how you set up your small business when you begin.
So some things to keep in mind. So if you do decide to set up your business as an S corporation, you can have no more than 100 shareholders. All those shareholders have to be U.S. residents, and each member is only allowed to own one class of stock. So the shareholders can report their business income, expenses, losses, and deductions all on their personal tax returns. They're also eligible for that 20% tax deduction that Shannon talked about. But the shareholders pay taxes on business profits at their personal income tax rate. It's one of the most common types of legal structures for small business owners because they have the same advantages as the traditional corporation, but with more tax flexibilities.
Okay, one step before we go further, we want to let you know, guys, we are advisor. We are not attorneys. That's the disclaimer. If you have something specific wrong with your taxes or with your business, please seek the advice of an attorney. Thank you very much.
So let's talk a little bit about C corporations.
Traditional corporations are C corporations, C corps they're called. The organizational structure of a C corp consists of shareholders. With a small business, we really don't have a lot of shareholders. There's a board of governors, officers, directors, and employees. Although Fortune 500 firms are the most well-known C corp, which we all want to be one day, it's still a viable option to structure your small business this way. It provides legitimacy to investors if you have somebody that want to invest with you and clients, allowing you to raise funds faster and land larger contracts. If you anticipate quickly transferring from one startup to a more established company, which you can start as an LLC and then switch over if you realize your business is getting really big, then the C corporation structure, it just might be right for you if you have your vision already going with you.
So the C corps are going to be the only type of business that we're going to discuss where you pay taxes on the company level. So the current corporate income tax rate for the C corp is a flat 21%. Additionally, in comparison to the S corporations that we already talked about, this allows shareholders to report profits and loss on their personal tax returns, and the shareholders receive dividends, so a share of the company's profits, and so the shareholders must pay personal taxes on those dividends as well.
That's why I did not choose that as my setup when I was setting mine up. I chose LLC. Okay, the taxation structure on both companies and shareholder level is referred to as double taxation. That means you're going to be taxed twice. This turns off many small business owners because I don't want to be taxed twice on whatever I do. So when starting out, LLC tends to be the more popular option than C corps for various reasons. I don't want to have my business, then have to work again to pay double taxation.
So then let's talk about those LLCs, those limited liability.
Yes, go ahead. Many small businesses tend to form an LLC. That's what I have. That's what I encourage a lot of my clients to do. Members have two important tax advantages: no double taxation and double business losses. So you have a lot of deductibles when you have a limited liability corporation. As business owner, that's what we need. That's what I need.
So as Shannon had mentioned, unlike that C corporation, the business income is not going to be taxed twice at that corporate level and then